Get ready for the ultimate news drop. The pace of change is absolutely relentless, and staying ahead of the curve is more crucial than ever. We're diving deep into the stories that are shaping the future, bringing you the insights you absolutely cannot afford to miss. From market-moving analyses to groundbreaking developments, we've got your front row seat to the action. Stick around, because you're about to get the inside scoop on what's happening right now and what's coming next. This is your essential update, your competitive edge, your daily dose of what matters. First up, we're dissecting the intricate world of stock analysis, focusing on Oracle's current standing. Get ready for a deep dive into the mixed signals emerging from its technical charts, juxtaposed against the undeniable strength of its fundamental performance. This is the kind of analysis that can make or break your investment strategy. Next, we explore a powerful strategy for outperforming the market, highlighting key companies like Oracle, Intellia, and Pharming Group. Discover how specific investment approaches are identifying opportunities and delivering results, even in challenging economic climates. We'll break down the tactics that are putting investors ahead of the pack. Then we tackle a burning question. Could a modest investment in Oracle today skyrocket into a fortune by 2030? We're analyzing the company's trajectory, its market position, and the projections that could lead to massive returns. Finally, mark your calendars. Oracle has just announced its Q1 FY26 earnings date, and we'll tell you what that means for investors. Don't miss out on these crucial updates. Hit that subscribe button and ring the notification bell. Mixed signals for Oracle, a deep dive into technicals and fundamentals. Oracle's stock is currently presenting a fascinating dichotomy for investors, with its technical indicators flashing a spectrum of signals, while its underlying business fundamentals remain robust. This complex picture suggests a period of careful observation and strategic decision-making for those tracking the tech giant. The company's technical chart patterns are showing a degree of volatility, a common characteristic in the current market environment where sentiment can shift rapidly. Traders and analysts are scrutinizing these patterns for clues about potential short-term price movements, looking for signs of upward momentum or potential pullbacks. Factors such as trading volumes, resistance and support levels, and moving averages are all being closely monitored. However, it's the fundamental strength of Oracle that provides a compelling counterpoint to the technical noise. The company's core business, built on database management and expanding into cloud computing, continues to demonstrate impressive resilience and growth. This dual narrative, the choppy waters of technical trading versus the solid ground of fundamental performance, creates a dynamic environment for evaluating Oracle's stock. Investors are tasked with weighing the short-term trading signals against the long-term value proposition offered by Oracle's established market position and its strategic expansion into new, high-growth areas. The interplay between these two facets of market analysis is crucial for understanding the complete picture of Oracle's current investment profile. But what if there's a proven method to navigate these complexities and consistently beat the market? Get ready, because next we're revealing the strategies that are putting investors ahead of the curve. Beat the market the Zacks way. Oracle, Intellia, Pharming Group in focus. In a market that recently saw major indexes like the Dow Jones Industrial Average, Nasdaq Composite, and S&P 500 close a losing week, with modest monthly gains of 3.2%, 1.9%, and 1.6% respectively, navigating investment waters requires a strategic edge. Last week's trading was influenced by profit-taking and escalating inflation concerns, which tempered the optimism generated by strong Q2 GDP data. Investors became cautious ahead of a key PCE inflation report, which confirmed persistent price pressures, and this overshadowed earlier hopes for potential rate cuts signaled at Jackson Hole. Lingering geopolitical tensions and energy market uncertainties further dampened broader market sentiment. Amidst this backdrop, Zacks research emphasizes its time-tested methodologies for providing unbiased guidance to help investors outperform. The firm highlights significant achievements, such as Dorian LPG and FS Bancorp surging following Zacks rank upgrades to strong buy and buy, respectively, with Dorian LPG gaining 26.4% and FS Bancorp 8.2% against the S&P 500 6.2% and 5.4% increases. The Zacks model portfolio of strong buy stocks has shown impressive historical performance, returning plus 147% in 2025 through August 4th against the S&P 500's plus 560%, plus 22.4% in 2024 versus the S&P 500's plus 28%, and plus 20.65% in 2023 compared to the S&P 500's plus 24.83%. Crucially, since 1988, this portfolio has generated an annualized average return of plus 23.6%, significantly outperforming the S&P 500's plus 11.3%. The Zacks recommendation system also saw Pharming Group and Lumentum Holdings surge by 49% and 45.5%, respectively, after their recommendations were upgraded to outperform. Furthermore, Zacks' focus list stocks Intellia Therapeutics and CBRE Group have experienced substantial gains, with Intellia up 58.6% and CBRE up 30.2% over the past 12 weeks, outperforming the S&P 500's 8.8% rise. The focus list portfolio itself has consistently outperformed the broader market, demonstrating strong returns across 1, 3, 5, and since 2004 periods. The Zacks Earnings Certain Admiral Portfolio, ECAP, and Earnings Certain Dividend Portfolio, ECDP, also showcase resilience and outperformance in specific market conditions, with stocks like Oracle, Thermo Fisher Scientific, Tractor Supply, and Fastenal making significant gains. MasTec, from the Zacks Top 10 Stocks for 2025, has also delivered solid returns, outperforming the S&P 500 year-to-date. These examples underscore Zacks' consistent ability to identify stocks poised for growth, providing investors with a clear advantage in diverse market environments. Could a focused investment strategy truly multiply your capital over the next few years? We're exploring that exact possibility next, with a deep dive into one company's potential for explosive growth. Can $10,000 in Oracle stock turn into $50,000 by 2030? While Oracle might not be a household name like Apple or Microsoft, its significant market capitalization, exceeding $625 billion, speaks volumes about its substantial presence in the tech industry. In recent times, Oracle's stock has experienced remarkable appreciation, soaring by over 287% in the past 5 years alone. This impressive performance naturally leads to the crucial question: does Oracle possess the potential to quintuple an initial investment of $10,000 within the next few years, specifically by 2030? Oracle distinguishes itself through a deliberate strategy focused exclusively on the corporate market, eschewing consumer-facing products like smartphones or widely distributed operating systems. Its core strength lies in database management, a domain where it remains a dominant provider for business clients. Over the years, Oracle has strategically diversified from this foundation, expanding into adjacent areas such as cloud computing. This unwavering commitment to a proven business model has consistently yielded exceptional growth and high profit margins. In fact, over the last 5 fiscal years, Oracle's annual revenue has surged by an impressive 42%, surpassing $57 billion in fiscal year 2025. The company's profitability has also been exceptionally strong, with net income reaching $12.6 billion in the same year, translating to a healthy profit margin of 22%. Analysts are projecting continued robust performance, with collective expectations for a 16% increase in annual revenue for the current fiscal year, reaching nearly $67 billion, and an even more substantial 20% rise in the following year. Earnings per share are also anticipated to grow by 12% and 20% respectively. Given these strong fundamentals and positive growth projections, the prospect of Oracle's stock price multiplying 5-fold by 2030 appears not only plausible, but potentially achievable even sooner. This outlook is underpinned by Oracle's disciplined execution, its strong market position in essential enterprise services, and its strategic expansion into the lucrative cloud sector. Staying informed about a company's financial health is paramount for any investor. Get ready, because we're bringing you the latest on Oracle's upcoming financial disclosures. Oracle sets the date for its first quarter fiscal year 2026 earnings announcement. Oracle Corporation has officially announced the schedule for its upcoming financial reporting, setting the date for its first quarter fiscal year 2026 earnings announcement. The company confirmed that these results will be unveiled after the market closes on Tuesday, September 9, 2025. To provide a comprehensive overview of its financial performance and outlook, Oracle will subsequently host a conference call and a live webcast. This important event is slated to commence at 4:00 p.m. Central Time, offering investors, analysts, and interested parties a platform to delve into the details of the company's quarterly results. The announcement, made via PR Newswire, also included boilerplate information about Oracle's business, highlighting its integrated suites of applications and secure, autonomous infrastructure within the Oracle Cloud. It also reiterated key trademarks, including Oracle, Java, MySQL, and NetSuite, noting NetSuite's pioneering role in cloud computing. The press release emphasizes that investors and interested parties can access the live webcast directly through Oracle's dedicated investor relations website, located at www.oracle.com/investor. This proactive communication ensures that stakeholders have ample opportunity to prepare for and participate in the discussion of Oracle's financial health and strategic direction. The scheduling of this earnings announcement is a critical event for the investment community, as it will provide key insights into Oracle's performance in key areas such as cloud adoption, enterprise software sales, and overall revenue growth, all of which are crucial indicators for assessing the company's ongoing trajectory and future potential in the competitive technology landscape. The market will be keenly watching for any updates on customer acquisition, cloud infrastructure spending, and the performance of its various business segments, which will collectively shape the perception of Oracle's value and its stock performance in the coming periods. The availability of the webcast ensures broad accessibility for a global audience eager to understand the company's latest financial narrative. That's a wrap on today's essential updates, but we're not done yet. Stick around for a rapid-fire recap of all the top stories. And that's a wrap on another action-packed update. We covered Oracle's stock analysis with mixed signals, explored Zacks' market-beating strategies, questioned Oracle's massive growth potential, and announced Oracle's upcoming earnings date. Don't miss out on future insights. Smash that like button, subscribe to Microsoft Sphere, ring the notification bell, leave a comment with your thoughts, and follow us on all our social channels for even more exclusive content.